So I did want to start out this brief presentation with, I hope you guys know who this is. I think John will know who this is. Hans Rosling. You guys know who Hans Rosling is? He's probably the best person I have ever seen produce volumes of data in graphic form. He just had a whole bunch of great things he's put out in the last many years. Unfortunately, he's not alive anymore. But I had this quote that I ran across a couple of days ago, and I think it's really important. So I just want to share it. This was from his book, Factfulness, in 2018, before he passed. So forming your worldview by relying on the media would be like forming your view about me by looking only at a picture of my foot. Sure, my foot is part of me, but it's a pretty ugly part. I have better parts. My arms are unremarkable, but quite fine. My face is okay. It isn't that the picture of my foot is deliberately lying about me, but it isn't showing you the whole of me. And I want to start with this because I think this is even more true in the echo chamber of today's media environment and social media environment. And I've said this before, if you aren't intentionally reading broadly than your normal sources, than your Facebook feed, than if you're on Twitter, your Twitter feed, or than your favorite media sources, then I promise you are missing a portion of the conversation. Everyone is always talking their book. They're making their case. And if you listen to one case all the time, that's the case you already believe in, and you tend to get that reinforced on a regular basis. So I have a couple phases I'm going to go through here. The first, I'm going to talk about some high frequency data. And we've talked about this a lot in every single time we've done this Q&A. And it really hasn't changed. Most of the high frequency data, this is stuff that we get information on every week or every couple weeks. It's as it says, high frequency data. We get a lot of information coming in on a regular basis, and things like continuing jobless claims, retail indices, box office receipts, hotel occupancy, TSA checkpoints, the supply of gasoline and gasoline usage, rail car traffic. These are reported on a regular basis, and by and large, they are all positive except for box office receipts, and hotel occupancy is down a little bit now. It was up, now it's down. And then most recently on a national level, the open table restaurants, they're down month over month, but they're up week over week. And this is important because this is going to ebb and flow. It is all tied to virus. And the closer we get, and you've seen this in the last couple of days, you've seen last week or so, lots and lots and lots of news about now 2 really, really positive vaccine outcomes. We probably won't see the vaccines for a number of months, but the markets responded very, very positively to this information. So the high frequency data is positive. It's slowing positive, but it's positive. Another couple things that have happened in the last couple of weeks that you guys may or may not know about. The largest trade deal ever was solidified last week. It's called the Regional Comprehensive Economic Partnership, and it's China, Japan, South Korea, Australia, New Zealand, and 10 other Asian countries. There's almost no teeth in this tariff. If you read, I've read widely both sides of the aisle on this conversation. A lot of people say, we should be in it. Trump's an idiot for not being in it. A lot of people saying that it's not such a big deal. There's no teeth in it. There's no labor rules at all in it. There's only very, very, very slight tariff reductions, and they don't actually take in place for a number of years. It basically set up e-commerce laws among Asian countries. The U.S. is not in it. India is not in it. But it's the largest trade deal ever. It covers a third of GDP, a third of the planet. It's bigger than anything we've been involved in. So that's one big thing that happened last week. Another big thing that happened last week, you may or may not have seen this. SpaceX made history again. So they got certification by the US government for human travel. And they have now delivered 4 astronauts to the International Space Station. at a 40% lower cost than relying on the Russian Soyuz to get our astronauts up there. So another thing that's coming up, and I think this is a reasonable discussion to have, is, and you may or may not have seen this yet, but there is talk is beginning. We knew this was coming, but the talk is beginning of a double dip recession. So I want to talk about two quick things. I want to define recession. There's two commonly accepted definitions of recession. The first is the one that journalists use, and that is, and this is one we often talk about this, it's 2 consecutive quarters of negative GDP. So if you have 2 consecutive quarters of negative GDP, the world calls that a recession. Journalists call it a recession, advisors call it a recession. But really what the actual recession call comes from the National Bureau of Economic Research. And what they use is consecutive business cycle peaks and troughs on a monthly basis. And so the difference is important, because if we start talking about a double dip, let's put that in the framework. If a single dip recession is what we are currently in, like we had a little bit down quarter in the second quarter, we had a horrifically down quarter. Sorry, we had a little bit down quarter in the first quarter, we had a really down quarter in the second quarter, then we had a big up quarter in the third quarter of this year. And so it looks like, hey, maybe the recession's over. But we're now seeing a lot of cases. We're seeing deaths increase again. We're seeing states put in some additional restrictions. I'm assuming it's just a matter of time before we get more restrictions in California and specifically where we are in Alameda County. Just a matter of time before we see, my kids were looking forward to December, maybe going back to school. I doubt that happens. I don't think that's probably going to happen. And so with that comes restaurant closures again. It comes retail closures again. There comes lots of different things that we had hoped wouldn't happen is happening again. That slowdown is probably going to lead to at least a month, maybe 2 months of negative GDP. It may not lead to an entire quarter. So the definition that you choose to look at is going to matter in terms of whether or not you're going to call this a double dip recession. So while things are improving and now they're kind of slowing down a little bit, and this is kind of big. If much of it depends upon what Michael was asking earlier, what's going to come if we have a new stimulus. So I doubt we're going to see stimulus until we see a changing of the guard. And it's very unlikely that we see the stimulus that we had talked about before. We're not going to see another $2 trillion stimulus package. We may see $1 trillion. It's going to be more targeted. It's going to be more targeted to people who aren't working. There may be some more business supports. There may not be some more business supports. I think it's going to be really targeted towards the humans that can't go back to work. Michael, to answer your question specifically, the flavor of that targeting, I don't think we can speak to the flavor of the targeting. I think it's got to go through all the committees. It's got to go through both parties. It's got to be signed by a new president. And so I think it will be okay. I think it will be positive. I don't know specifically who it's going to benefit. There's no way to know that until it goes through that series of conversations. And then the last thing I want to just talk about real quick before just opening up completely to questions is the election itself. It's been kind of dramatic. Days, weeks, painful, still not technically over. It looks like there will be divided government, though that we won't really know that until January. And so it looks like we're going to have a Republican Senate, a Democratic House, and a Democratic president. And the stock market, as you know, has taken this really, really well. The stock market has been really positive about this. The combination of the election and the news about the vaccine has been really well received. At the same time, the US 10-year Treasury, the thing that we look at as the risk-free rate of return, has fallen to 0.82%. So it's really low. The rate of interest, the risk-free rate of return is really, really low. And if you think about all the other potential returns are usually returns related to that, we can kind of assume that our rates of return going forward from here are going to be a little bit lower as well. And there's going to be a lot of lingering uncertainty. around the election and the lawsuits and, what's Trump going to do after this? And I just am reading article after article after article about that. So that's going to create a lot of volatility probably in the coming weeks. But it's not the noise that creates the long term. It's going to be the policies that come out of the new guard. So let's talk about that just really quickly. In the macroeconomically, again, I think we see a smaller but more highly targeted program of stimulus, and I think that that's probably a good thing, because on the back end of this, what we're going to see is conversations around what do we have to cut to reduce debt, and the less we have to cut to reduce debt, the less onerous that conversation is going to be. And so having it being targeted specifically to people who can't work will be really, really, really important. Hopefully we'll avoid a lot of the stuff that came out of the earlier package, where, there has been a lot of thievery, a lot of crony capitalism kind of stuff that occurred out of that. And hopefully we can avoid some of that. Domestic policy, there's sort of 3 or 4 areas that I think we can look at and anticipate some real changes. Both parties have talked about it forever. I think we'll probably see some kind of an infrastructure package, as a way, maybe a jobs package that goes along with that. We'll probably see some changes in healthcare, not as much as we would have seen. We do have divided government. We can't do all the things that maybe we had hoped for. So there's some positives and negatives to that. And some of the positives are, you'll see Biden and the administration will focus on spending on specific subsectors in healthcare. So you'll see some changes there. In energy, you'll see Biden will probably recommit to the Iran nuclear agreement, which will allow a little bit more supply in oil, which would depress some oil prices, which are already down. And you probably see, and this may have happened either way, you'll probably see some more regulation in technology sectors. And I think that's why you see some of the changing of the leadership in the stock market has been away from technology and towards value. I mean, I don't know if you guys see this, but the Dow Jones and the Dow Jones Industrials are they're hitting new highs, big new highs, not minor things. In foreign policy, I think Biden is still going to be pretty hardcore against China. I think that China it's scary. I don't know if you guys have seen the news around the Chinese IPO of Ant Financial or Ant. So there's a guy who pissed off the Chinese government, and he had a big company. He was already wealthy, and he was going to take this thing public. It's going to be the biggest, IPO in history. Chinese government said, "Nope, sorry, that's it. Can't go public." Cut the valuation of the company in half. The expectations it'll probably go public later this year. But that kind of a power, that's not good for an economy where we're trying to deal in openly and stuff. It's not a good thing. So I think we're going to see a lot more pressure on China, even in a Biden presidency. However, it's not going to be as chaotic. It's going to be predictable. He'll have a looser stance towards immigration. You'll just see him take a hard stance versus China, and most other places he'll be a better neighbor with, and he'll probably be a better neighbor with China as well. But I don't think that'll relieve a lot of pressure on those kind of tariff conversations with China. Now, in terms of investment implications, this means a couple things for us. The main thing that we're looking at going into 2021 is we are looking at a potential restructuring of portfolios around equity versus fixed income, because fixed income, and this is long-term thinking. This isn't, because of Biden or because of Trump not being there, or because of an election or because of anticipations on earnings. This is the probability of fixed income being anything other than a ballast going forward. In other words, the probability of fixed income giving us any kind of return at all is minimal. Because that risk-free rate is so low, you may see us remove things like our high yield portions of the portfolios and then put some of that more into equities and move some high yield into some more stable fixed income to get really, really safe and secure with our fixed income, which means no return on that, which means we try to get more returns out of equities. And I think that there are places in the planet around the earth that are still, you can find value. You can still find value in small companies. You can still find value internationally. large U.S. growth, not a lot of value there, as I think that most people understand that Apple and Microsoft they're rich right now, for sure. It should be noted, I don't think it ultimately matters too much that Trump hasn't conceded the election. So we'll still see a lot of political and legal wrangling and maneuvering in the days ahead about that, maybe weeks. I don't think it ultimately amounts to anything. I think he's going to be loud and obnoxious, as he always has been. And I think that he won't fade away, but he'll fade out of the presidency. And then we'll get back to talking about some more normal things for a little while, I hope. That would be my real hope. But that's kind of all I have in terms of a brief presentation. I want to see if that stimulates any questions, or if John or Scott want to actually comment on anything as well.
Any thoughts on relations with Putin, that end of the world? Talk about China.
I think the reality is, I don't want to overstate it, right? I don't want to overstate it, but I don't think that without Trump as president, I don't think Putin amounts to much. I think China is the real issue. China is the new 500-pound gorilla. I mean, in 2035, the Chinese economy, they're already bigger than us in terms of manufacturing in lots of different ways. But in 2035, I think they're bigger in is it per capita? They take another step towards being the most dominant economy on earth. And so when we're thinking about how we're behaving in the world, it doesn't have to be a battle, it doesn't have to be a fight, but the people we should be most concerned about are the Chinese. The Russians they're big. They've always, tried to do things to our elections. I think that we're getting smarter about that. I don't think that they are the ones we have to worry the most about, especially since, Trump's not in their back pocket anymore. So.
On that, I heard somebody say that, and I can't remember and cite the source, but there are tons of buildings in China that were built on speculation that are really empty. I don't remember who said that, but do you have thoughts on that?
So that's not new. I mean, that is what China does. And so China has how many billion people? And how many billion, do you know, Scott?
1.5, 1.3.
1.35. Well, yeah. Okay. So, and they have, this is, I think 10 years ago, no, longer than that, maybe 12 years ago, I had a client who biked across China, and he texted, he was, sending me emails on the way across saying, look, another one. And what China will do is to stimulate the economy is they will build a city, and then they will move people out of the farmland into that city. And then they'll build another city, and then they'll move people out of the farmland into that city. And so it's like they build an entire, infrastructure program as a way to boost their economy. And then they move people into that city, so I do think that they have lots of construction that they've done that is probably vacant, but that's sort of normal for something. That's sort of how China boosts their economy, boosts their GDP, is by building massive projects like that.
That's fascinating. I do have another question. And again, it's a little bit diffuse because I can't find some snippets I took of a 401k committee meeting update at my place of business. But they had a really weird chart, actually 4 charts on one page, that showed the reasons they think GDP will go down and that we will be heading on some kind of a nosedive at some point. And I don't remember the time frame. I'm sorry for my lack of details. But 2 of the 3 things they cited were deaths, lower population due to deaths from COVID, number 1. Which, I mean, I think deaths from COVID are alarming, but they're not that huge a number. Yeah. So the second thing was lower population due to all the immigration stoppage.
So,
okay.
I mean, that's actually a positive for now, because yes, immigration was stopped for 4 years, but it's going to be opened up now. Like Biden will open those doors again. That's huge, actually, and that's true. I'm less concerned about a long-term decrease in GDP. I mean, there's people that call for it from time to time. It just, It just doesn't happen because there's, every human being that's around wants to have more for their kids, more for themselves. GDP is, maybe it'll be more services and less goods at some point, but I'm just not worried long term. There may be a dip as we slow down, but then we're going to come out of it the other side.
Okay, so I have one last thing, and then I'll be quiet and let other people talk. But you guys are so positive. I mean, you just are never not positive. What if there really were a problem? What would you sound like? I mean, can I trust that you would actually ring a bell in the other direction if it happened?
Well, I mean, it's an interesting question, and there have been problems, and there are always going to be problems. They're always going to be on your news feed. But there's no evidence supporting when problems arise, you run to cash and wait for the dust to settle. The evidence doesn't support that behavior. And you can look at the tech bubble, you can look at the terrorist attacks in 2001, you can look at 2008 or COVID. Going to cash has been a wildly huge mistake and creates horrible outcomes for people that do that. So we're just, it's not even an opinion, we're just supported by evidence. We just sort of live in that world, in that genre.
Joan, you have a question?
I did. I wanted to ask you about, just to go back a second to the fact that you were saying you're going to ease out of high yield, which of course is higher yield. So if we're not going to have any yield, why are we leaving high yield at this point in time?
Well, so it's really, okay, so let's talk about what high yield is.
Mm.
High yield is risky fixed income.
Mm.
It's fixed income where the probability of receiving the yield or the repayment of the principal is lower than the probability of receiving the yield or the return of principal of like a treasury bond.
Right.
So the interesting thing that we have right now is because rates are so incredibly low, let's pick one company. Let's just use Ford for an example. Like, if Ford, and I don't know the number, I'm just going to spin out numbers here. If Ford has a bond, Ford's bonds are paying 1.6%. Ford's equity is paying 2.3%. So in that circumstance, do you want to own Ford's bonds or Ford's equity? Well, the only reason you would lose money, the only reason you would lose the position, the holding on your Ford is if Ford went under with the equities, right?
Right.
But you pick up a yield, and is Ford going to go under? That seems like an unlikely thing. So you have to deal with the volatility, the zigs and zags of owning the Ford equity instead of the Ford bond. But you may be better off owning the Ford equity long term because you get, and maybe in other cases it's not as rich of a dividend, but you get the upside of the company as well. And so even if it's a smaller dividend, you also get upside in company. And so the issue is really changing the structure of the portfolio itself, just realigning some of that risk, because the reality is high yield. In 2008, high yield acted like stocks. High yield went down the same way stocks went down. So let's use that in a place where we can get better return, and at the same time, maintain the kind of risk return profile of the overall portfolio. And it's not like we'd sell. Let's say you have a portfolio that's 10% high yield. We wouldn't take that whole 10% and put it all into equities because that would increase the volatility of the portfolio. But we might take 5 of that 10% and put in equities and put the other 5% in a secure fixed income. And then it's kind of creating the same scenario, a little bit less diversification, but the same kind of risk return profile.
So you mentioned the Ant Financial IPO, and I just because I'm a student of this and have been for like 25 years, I want to go over that again and really speak to it in a way I think everyone on this call can understand a little bit better. So Ant Financial was owned in part and parcel by Alibaba. Jack Ma was the CEO of this company, widely successful. In no uncertain terms, I would say Alibaba is basically the Amazon of China, except they have no competition because it's China, right? Amazing company. So to put it in perspective, how large this Ant Financial IPO truly was, if it went public as expected, it would have been twice the size of Morgan Stanley, twice the size of Wells Fargo, twice the size of Citi, and twice the size of Goldman Sachs. So this is not just like a Chinese deal. This was like a profound situation. And for the leadership to say this isn't happening, really not a good thing as to what John was saying, really not a positive for globalization, capitalism, et cetera. That's a pretty scary thing that happened.
And the why is really interesting. He came out like 3 days before the IPO, before it was going to be, and he said he questioned the Chinese leadership. So he questioned Chinese leadership, and they said, sorry, you can't go public. We'll take away whatever, $700 billion from you, which is mind blowing.
No, I just said, can you explain the concern about the TikTok issue, whether or not they should be allowed to come into this country, and if so, they have to come in partnered up with an American company, and it's all about, I don't know if it's conspiracy or not, but it's all about, the fact that they gather this enormous platform, they gather a huge amount of data.
Yep.
And then are obligated, because they're a Chinese company, to hand it all over to the Chinese government.
Right. I think so.
Should I lose sleep over that?
So it's interesting that the thing. So this was probably 3 or 4 years ago. My son brought me the first time I ever saw a TikTok video and said, here's this TikTok thing, and I'd like to download TikTok onto my phone. So I went and I Googled TikTok, and I was like, you find all the articles about how they're going after your data, and they're going to sell your data to the Chinese government, all those things you just said. The thing I don't know is how true that is. So I know that there's stories about it, and I think the reality is Facebook, Twitter, they already do that. It's just they don't give the data. They sell the data. They don't give the data to the Chinese government. So the difference between what's already being gathered about you today. I mean, we just did this. I watched this podcast or watched this presentation on how marketing occurs these days. How, if I wanted to, I can go to Experian, and I can get from Experian, a list of people who drive a specific car, are bird watchers, like camping in the Pacific Northwest, and have 2 kids. And I can market specifically to that list of people, because the data is out there. It's all known. It's just in the United States, where we sort of say, okay, you can have the data, you can sell the data, you can use the data, you can splice and slice the data all you'd like, as long as you're selling it to advertisers. In China, they're going to give it to the Chinese government. And I think that's ultimately the problem is, do you want the Chinese government to have it? The rest of it, I think is a show. I think it was the Trump and the Fox show. I really don't know, but I'll say this. I did not allow my kids to have TikTok, because I don't know if it's true or not. I just said, no, I'm not going to take that risk. Can they get on? Is my son on Snapchat? Yes. Do they gather his data? And yes, for sure. But yeah, I don't think you lose sleep about it. It comes out of the wash eventually.
I think they're recruiting Americans to spy for China. So
is that what they're doing? Yeah, probably.
I'm just making that up.
Yeah. I think.
Don't worry, Michael.
Yeah, don't worry. I think that in the next 2 years, you're going to see a lot of conversations about this topic, about our data security, and about whether or not, Facebook is allowed to do the things that Facebook does. And I think that's the antitrust stuff is going to come with that. And that is going to be one of the things we talked earlier about, technology being regulated, more regulated. That this is going to be part of that. This conversation will be part of that for sure. We'll see more data come out on that.
Where is the progress, or if any, towards TD becoming part of Charles Schwab?
That is an inevitability, and we don't have any additional data just yet. 18 months. So the big question is, how will that affect you, right?
Well, that was my follow-up.
Yeah, and we got confirmation maybe a week or 2 ago that the primary reasons. Remember, 4 years ago, we made the decision to go to TD instead of Schwab. And the primary reason we did that was for TD's technology, their trading platform, and their technology, and their openness for integrating with other technologies that we wanted to use. And we were told a week and a half ago that the trading technology, the stuff that we use and we rely on, Schwab is going to actually adopt TD's technology. So we're actually going to get the best. I think at the end of the day, we're going to get the best of both worlds. So at the end of the transition, we're going to have all the good stuff that we liked about TD. We're going to have the size of Schwab. We're going to have the other stuff that Schwab has that TD doesn't have. And I already am looking at the possibility of a second custodian, just because I don't want everything be in one place all the time. I want to actually have maybe a second custodian. But from here to there, the path from here to there, I'm not sure what it looks like yet. What they're telling us is there will be no paperwork required. One day you'll go in and you'll flip on you'll log into Orion. It'll show you, TD Ameritrade accounts. The next day you'll log into Orion and that's the Mindful Money portal. And you'll see your Schwab accounts, and it won't affect anything. There's always some kind of hiccup in this kind of a transition, and I would just anticipate that this would be no different. We'll run into challenges and we'll have to figure them out as we go.
Do you have any concern at all about Trump stealing the election through the state legislatures? Do you think that I mean?
No, I don't think that's a viable possibility.
Yeah. We have to admit that it's a possibility.
I mean, it's written in the Constitution that this can happen. They can do it.
But his hill to climb is he has to turn many states, and he has to have many successful legal challenges, and there is no evidence of the things he's claiming. So I think it's
not worried.
I'm not worried about it.
Well, like the Republican head of the legislature in Pennsylvania said there was no possibility that they would change because state law decades ago indicated that the popular vote was the determinant for how those electors would be selected and how they voted. And you cannot retroactively change it for an election. It would have had to have been changed prior to the election.
Yeah.
Not sure that's true in all the states, but yeah.
The legal people working for the Democrats are light years different in quality from the people who are currently working for Trump. No, seriously.
Yep.
I mean, the Biden group have just a broad group of highly experienced constitutional lawyers. None of the people working for Trump at this point, because his two major law firms have now left him because they're unwilling to continue to launch spurious lawsuits. So I just think that the possibility.
You're not concerned about Rudy?
I'm sorry?
I said you're not concerned
Michael
about
was asking about Rudy Giuliani. This is not a great legal mind at this point, if it ever was. Jonathan and I are writing a piece about retirement, and I've been doing a bunch of research, and many of the papers indicate that when people look at their own retirements and what risks they have, one of the major risks they're conscious of is market volatility, whereas the objective reality with regard to the impact of market volatility is much, much less. And objectively speaking, it's a much lower risk. So I think we are constantly beset with negative information around us that fosters attitudes that do not bear out when you look at the evidence. So it's something to be aware of constantly.
Yeah, that's why I meditate every day, to remind myself. You got to find that center spot every day. Thanks, David. Thanks, everyone. I think we can call it a wrap. Any last minute words, Scott?
No, it's great to see everybody. Thanks so much for joining us.
Yep. Thank you. Thank you.